Thank you, Manami. Good morning. Thank you for joining us in the third Economic Outlook Bloomberg Technoz. This session, we will explore the forces shaping of the global economy in 2026 and what they mean for Indonesia. So the world is entering a period of structural change driven by monetary policy, rapid advances in artificial intelligence, and shifting geopolitical dynamics, and even the credibility of major currencies. For Indonesia, the challenges ahead is not only sustaining growth, but also strengthening investor confidence or trust. We know that after the MSCI warning, and also Indonesia need to reducing market volatility, then ensuring liquidity and fiscal policy. So to delve deeper into the matter, we will listen, discuss, and have a Q&A with our special speakers, and it's a privilege for me to invite Ms. Chang, Chief Economist, Bloomberg Economics, to join me on the stage, and also Mr. Mohit Mirpuri, Senior Partner Wealth Management, SGMC Capital, on the stage. Please welcome. So thank you for joining us. Before we begin the discussion, I think it's best for us to listen first about the insight that both of our speakers bring to us today. So I would like to give the first time for Ms. Chang first to give the presentation. You have 10 to 15 minutes, and you have your podium there. Please. Yeah. Okay. Okay, yeah, sure. Oh.
Okay. Good morning, ladies and gentlemen, friends. It's a great pleasure to be here today to share our thoughts on the global economic outlook for 2026. It's really a pivotal year for the global economy, and I'm sure it's going to have very important implications on Indonesia's economy. We're going to look at the global trends and dive into the dynamism of the US and Chinese economies and highlight the dynamism of the ASEAN economies. But before I actually do that, I want to look into some mega trends, long-term trends that are affecting the global economy now. Oh, I see. Okay. Oh, can we move? Yeah, go into next. Okay. So this this year, a remark that sticks in my mind the most is what Mark Carney said in his very powerful speech at Davos. The world is not in a transition, but a rupture. He's talking about discussions within the geopolitical context, but it's highly relevant for the economic sphere. In economics, I'm going to highlight three major trends. The first trend, as Mr. Fenley already mentioned, tariffs. At this point, the average US tariffs are around 15%. The last time the world saw tariffs this high was a century ago, back in the 1930s. So the elevated tariffs are not just affecting individual companies' operations, but also the whole global supply chains. A lot of companies are not just twisting, just making small changes to their production structures. They are building from the ground up. So that's the tariff shock. The second aspect is artificial intelligence. AI is spreading across the world, if you like, a digital wildfire. Then it's not just coming, it's really here. It's not just affecting individuals' way of working, but it's going to reshape how the big economies reorganize their industrial frameworks. So that's the second trend on AI. And third trend, adding to that, is erosion into dollar dominance. The unprecedented uncertainties surrounding fiscal cliffs, geopolitical risks, have invited tensions, anxieties across the world among investors, inviting people looking into alternatives such as cryptocurrencies, precious metals, and other potential reserve assets. So those three major trends I talk about, they are mega trends really with tentacles stretching into every aspect of every economy. They might not jostle the growth for 2026, but they're going to affect multi-year trade growth trajectories of the global economy, as well as for individual economies, certainly relevant for Indonesia as well. So that's the big picture. Next. Okay, so that's where, in terms of backdrop of the global economy, if we can now go into more specifics for the outlook for 2026, and the global economy turned out surprisingly resilient in 2025, and in 2026 we do project, Bloomberg Economics team does project some moderate deceleration of the global economy to 3% for this year from 3.4%. So some sort of ease in growth, but certainly not a collapse. In terms of the global inflation trend, it's going to head in the right way, continue to head the right way. Back at the end of 2024, we saw inflation peaked at over 5%, but now at the end of 2025, that's already edged down to 3% or so, slightly above 3%, but we see for this year, by the end of this year, the global inflation is going to drop to below 3%. Next. In terms of the global policy setting, we see central banks across the world will continue to be supportive. There are some outliers. We know the BOJ has been hiking, out of sync with the rest of central banks for a couple of years. And then we saw the Reserve Bank of Australia hiked interest rates last week. But we saw those more as exceptions rather than a trend in terms of global macro policy setting. We see most of the countries remain supportive on the monetary policy front, perhaps shifting from easing to neutral rather than shifting from easing to tightening. So that's in terms of policy setting. Next. Yeah, next. So now we'll zoom in onto US. So the first picture wants to to just get tariff part of the equation out of the way, because tariff is here to stay. The Supreme Court could rule any time now. It might strike down the current government, or rather President Trump's use of emergency power to impose tariffs, but the administration has other legal tools, or even stronger, more robust legal tools to impose high tariffs. Next. So where's the U.S. economy? At this point, U.S. economy is remaining rather strong. We heard the fourth quarter, final quarter GDP in the U.S. really surprised on the upside, and the data overnight, the U.S. payroll data suggesting, again, the U.S. at the beginning of the year is expanding at above trend pace. So this is very much in line with our high frequency data monitoring. We look at consumer demand, industrial demand, credit availability, and so on. All the indicators seem to suggest at this point the US is pretty robust. Next. And next. Interestingly, on the inflation side, the US inflation has stayed quite moderate. The readings from November and December are pretty modest. And the most worthwhile point to highlight is, for some reason, I mean, there are guesses, hypotheses, and so on, but there isn't a good sense to understand why the tariffs haven't really affected the US CPI that much. This is one exercise we did, looking at pass-through from tariffs to end users. And the chart on the left is what we did in third quarter. At that point, there was some pass-throughs. For each dollar of tariff, 26 cents was passed on to end consumers. So it's about 1/4 pass-through. But when we repeated the exercise in the final quarter, we see very limited pass-through. So there's some sort of suggestion the impact of tariffs may have peaked. So at this point, overall, our US team think inflation is going to head in the right direction. Next. So how is the Fed going to set its monetary policy? How much Fed is going to cut? The Fed chair, new nomination has caused some market volatility, but we don't think his view would affect the rate cutting trajectory by himself, on his own. He has quite a sophisticated view on inflation. He used to be hawk back in 2006, 2011. At that point, we documented his hawkish remarks here. But more recently, he is highlighting the potential impact of AI on inflation. His view is AI can enhance productivity, therefore drag down inflation. So we'll have to see how he's going to vote in the coming FOMC meetings. But in overall terms, the FOMC is a group, it's a panel. So one, the Fed chair himself will not change the whole direction of monetary policy stance. It might affect rate decisions on the margin by 1 cut or so, but it's not going to change the trajectory substantially. So the next one. Yeah, So the market, given the recent very strong data, has cut back the rate cut expectations. Towards the end of November, the market was expecting 4 cuts of 100 basis points, but now the market is really expecting only 2 cuts of 50 basis points. So let's quickly move on to the China development. Next, and next. For China, given the constraint of time, I'm going to just highlight 2 trends. The first trend is the dichotomy between production and demand. So China's production is very strong, partly supported by very robust export demand. On the one hand. On the other hand, domestic demand has been persistently weak, especially on private investment and private consumption. So this chart shows the trends in China's production and demand. On the left, you see the trend line, the yellow line being the pre-pandemic trend. The production is well above that pre-pandemic trend, whilst on the right, you see the demand is well below the pre-pandemic trend, and the gap is widening. So the Chinese government is trying to support the economy, but it's quite a challenge to turn the weak consumption around. So in terms of China economy, that's the first trend. Next. 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 Okay, and the second trend I would like to highlight is China is making great efforts to transition the economy from property-driven to something else, and increasingly this something else is high-tech. And by high-tech, we have broadly defined areas including research and development, IT, hardware, services, advanced equipment, and medicine and green transition and sectors, including EV, batteries, solar system, etc. So those high-tech sectors have been growing quite rapidly. In fact, in 2025, it's the first time that sector's contribution has become greater than the property market. So it's an interesting gradual shift that is happening in China, which is quite positive. So let me finish off with highlights on Indonesia's development. Next. Yeah, next. Okay. So for Indonesia outlook overall, we are constructive. The fourth quarter GDP came out to be quite a surprise. That's positive number 1. Positive number 2 is that the strong growth was driven by domestic demand. But going forward, we do looking to smaller growth or slower growth rather in 2026. There are questions about sustainability of private consumption and the effectiveness of investment. And for that reason, we're looking at a slightly slower growth for 2026. Last one, last page. So I want to finish off by looking into a medium-term outlook. This is a new index Bloomberg Economics has just compiled, looking at export potentials across countries. And we look into various factors, including manufacturing capacity, skilled labor cost, and business environment, and so on, and energy, importantly. And when you look at all the factors together, we see that Indonesia ranks pretty high in this leaderboard. And that reflects Indonesia's advantages in labor cost and energy the world is thirsty for. So look into the immediate term. I think it's great for us to finish on a positive note that this country has a lot of potential. So thank you very much.
Well, give applause to Ms. Chang Su. Thank you so much for the presentation. We already heard an insightful presentation about the Indonesia's economy in the terms of comparison to the global dynamics, of course, Southeast Asia, and then China as well. But I have a lot of question about that. I guess the audience also have a lot of question about that. So because it's so interesting, but now we kind of like to invite our other speakers here. So because Mr. Mohit will talk about the viral situation and nowadays situation in Indonesia about Indonesian markets, of course. And so I would like to invite Mr. Mohit to present his insight. Please give applause.
Selamat pagi para hadirin yang terhormat. Terima kasih telah meluangkan waktunya hari ini. Terima kasih tim Bloomberg Technoz atas undangannya. Nama saya Mohit Mirpuri dari SGMC Capital Private Limited. Kami manajer investasi berbasis di Singapura. Kami mengelola dana investor dari Asia maupun Eropa dan berinvestasi secara global di berbagai aset kelas. Termasuk kami memiliki exposure di Indonesia. Karena menurut keyakinan saya, Indonesia memiliki potensi yang sangat besar dan untuk investasi jangka panjang. Saya lahir di Indonesia, jadi bisa bicara bahasa Indonesia. Namun izinkan saya melanjutkan presentasi di bahasa Inggris agar investor asing bisa mengerti dan lebih optimis ke depannya. So today I want to share, sorry, one slide before that, masih awal. Yeah, the title of my slide is Indonesia stress tested, structurally improving, and still compounding. So today I want to share a foreign capital allocator's perspective on how we actually think when we allocate capital. So we know the Indonesia story. It's the largest economy in ASEAN, fourth most populous country in the world, G20 economy, rich in natural resources. But the question that keeps coming, next slide please, is if Indonesia is so strong, why does the market still doubt it? This comes up time and time again. And so to address this, I want to start with one key fact. Quick show of hands, mungkin dengan tangan. Menurut audience, di 20-25 tahun terakhir, market yang mana yang paling bagus? Jadi Amerika? Anyone? Japan? Brazil? Michael says Brazil. Next slide, please. So the key fact here is durability beats headlines. Kalau investor mengambil waktu jangka panjang 25 tahun, JCI, Jakarta Composite Index, has actually beaten Japan, US, Singapore, Hang Seng. So we have to be confident about Indonesia's durability. It has gone through multiple cycles. Asian financial crisis, global financial crisis, COVID, but yet it stood the test of time. This is in US dollar terms. Including rupiah depreciation, Jakarta Composite Index has outperformed the S&P and NASDAQ. So I think this is something that I want all of you to remember, that despite the volatility, it has stood the test of time. So ignore the short-term noise. Next slide, please. So a quick reality check on 2025. It did test confidence. It was not an easy year. The first half of the year was very challenging, lots of policy uncertainty. It was a new government. Everything was volatile. But the second half, we saw a turn of events. Everyone was confident, especially with the new finance minister's very aggressive push towards growth. We saw clearly fundamentals starting to improve. Next slide, please. So despite durable fundamentals, Indonesia has fragile belief. Why don't we believe in Indonesia? Volatility, we get scared for the short-term noise, but volatility does not mean the economy is fragile. Headlines, big negative headlines we see every day. From obviously last week, MSCI is a warning as well. But it does not stop the fact that Indonesia compounds long-term. And finally, the flows, the foreign flows, does not mean the fundamentals of Indonesia has broken. So I want to debunk a few myths amongst foreigners. Next slide, please. Foreigners think Indonesia is just a commodities market. It's actually not just a commodity market. We know the demographic dividend is very strong here. Half the population is of a working age. Actually, 70% of the population is of a working age. We have a median age of 30 years old. So demographics is far from peaking. We have other platforms, financial services, telcos that are doing very well. And resources should be an extra option. So we are the largest nickel producer, world's largest palm oil producer, coal, tin, bauxite, copper. So we should really be focusing on the fundamentals, and resources are added optionality. Next slide, please. The second myth is something I would agree with on the surface. It's more nuanced and actually understandable. Yes, the index last year delivered 22%, but it was driven by a narrow group of stocks last year. Yes, the free float and liquidity mattered, and yes, many global portfolios could not participate. So the question is, it's not about returns. The returns are there. It's about access to those returns. Jadi ini maksud saya key point bukan hasilnya tidak ada. Sebenarnya hasilnya ada, tapi akses terhadap hasil tersebut agak sulit didapati oleh global portfolios. And access is a market structure issue. So I believe the government is proactively fixing and resolving that issue. It's not a growth issue. So we believe Indonesia continues to hold necessary exposure in global portfolios. It shouldn't be excluded, given the returns I just showed you. Next slide, please. The third myth, the market lacks a domestic bid. Actually, the domestic investors have now surpassed 21 million. So as I spoke to even Michael before this, it was grown from 3 million in 2019 to 21 million today. This is only 7 to 8% of our population. If the population continues and is still young, and they continue to expand the middle class, the number of investors can only increase. Importantly, these investors are not dormant. They are active investors in the market. So they are contributing 50% of average daily trading volume. And this means that we can absorb volatility. We can absorb flows. It does not mean that we are, it's a negative thing. Next slide, please. The myth 4. This is one of my favorites. We obviously talk about right now, foreign investors are gone. Actually, I would like to highlight that foreign investors come in and out. They are sentiment driven, and flows are typically rules based. It doesn't mean the fundamentals are broken. So on the next slide, I will clearly show you what I mean. Next slide, please. So if you look at the first graph, it's actually the same thing. The first part is a weekly graph. So if you look at it, it's very messy, in, out, in, out. But if you look at it on a yearly basis, since 2006, foreigners have stayed. Foreign flows have continued to remain in the country. We had a negative outflow in 2022, And since then, actually, it's been positive. So ignore the short-term headlines and the negative sentiment and just focus on longer term. Next slide, please. Of course, we have heard about the policies from the new government, so I think that is good. And now what we would like to see is transmission. I think that's what matters for the investors globally. So Mr. Papurbaya has announced liquidity injection last year in September. Now we want to see that actually flow into credit, because then only it will imply confidence rising, earnings rising, and thereby equity markets continue to mature. Next slide, please. What are the foreigners actually watching as well besides that? So we would like to see, of course, policy credibility. We can't have things, of course, changing all the time. So there needs to be some form of certainty, and I think the government can be held accountable for that. Fiscal discipline is, of course, something that we would also continue to monitor, just given the fragility of our currency. And in reality, we want to see consumption improve and investment cycle turning. So again, in my view, this continues. That's why it says Indonesia is structurally improving. We believe it will continue to do so. Next slide, please. The loudest headlines rarely make the best investment decisions. This is one of my favorite slides, because every time we see a headline, we all get scared. We forward on WhatsApp, we send it to everybody, and the world's going to crash and burn. But actually, if you look at, for example, JP Morgan called China uninvestable in 2022. I don't know if you remember that. Adani shares, the Hindenburg short selling report on Adani caused everyone to shun away the India market. NASDAQ was in a bear market as 2022, everyone was calling for the markets will continue to crash. But if you ignored the noise and you invested since 2022, all those markets have given you double-digit returns. So yes, short-term noise is always uncomfortable, but if we focus again on fundamentally good companies, I do not necessarily think it's a bad thing. Next slide, please. Jadi untuk ini Indonesia intinya bukan cerita yang mudah, tapi Indonesia adalah cerita yang tahan uji. Indonesia sudah melewati banyak krisis, krisis Asia, krisis global, krisis pandemi. Dan setiap kali kita tetap bertumbuh. Dan bagi investor jangka panjang, daya tahan itu jauh lebih penting daripada kesempurnaan. Terima kasih atas waktunya. Ini sebenarnya end di sini, tapi kalau masih ada waktu saya bisa tambah slide. Masih, oke. Mungkin next slide, please. Just a quick one on Indonesia's forecast, since Ms. Chang actually touched on it. So I actually believe Indonesia will generate higher GDP growth than what the market's forecasting. So this is a DBS forecast. Indonesia is forecasted to generate 5.2% in 2026. Of course, our Minister of Finance has suggested this would grow higher. So I'm inclined to believe it would happen. Inflation is obviously moderate at just under 2%, or just under 2.5%. Next slide, please. From a valuation standpoint, Indonesia is trading one standard deviation below its average. So again, it's not an expensive market, even though you take into account the conglomerate stocks, etc. There is still very good value to be found. And the reason why the valuations are actually still reasonable. Next slide, please. The earnings growth profile for each company are expected to grow far more than all the ASEAN economies combined. So compared to Singapore, Malaysia, Philippines, Thailand, Indonesia companies are expected to generate more earnings growth compared to the rest of them. Next slide, please. And I don't know if this will surprise you, but actually 42% of Indonesian companies are net cash. So they are actually resilient we have room to grow and expand massively compared to the rest of the countries. Even we are higher than Japan, Korea, and far more than Europe and US in terms of cash balance. Next slide, please. So I mentioned the challenge was access and concentration, but not the absence of return. So even if you avoided some stocks and you just chose the big names or the big cap stocks last year, you would have still averaged out at least 13, 14% per annum, which is not so bad in my view. And that's all. Next slide. Thank you, ladies and gentlemen. It's been a pleasure.
Thank you. Because you're born here, I will call you Pak Mohit right now, no Mr. anymore. So thank you, Pak Mohit. So I think so interesting how our speaker sees Indonesia economic future, because so optimistic. Ms. Chang earlier said that we can, or our economy can grow like 5%. Despite global economic growth slowing down. And later, Pak Mohit also have strong belief that Indonesia market will stand firm. This is correct. And I think our discussion today will be so insightful because we also invite Q&A after this, of course, because I'm the moderator. So I will ask the first about what happened in Indonesia's economy nowadays. So I would like to ask a question for Ms. Chang and also Pak Mohit, but I will go for Pak Mohit first. From your presentation and statement, and lately your goes viral because your optimistic statement regarding Indonesia's market. But it's not my question. So, few days ago, Finance Minister Pak Purbaya said that the MSCI warning is actually good for Indonesia. So, do you agree with it? Because we see now the impact is quite concerning. And do you still believe that what Pak Purbaya said, it's kind of like nearly correct with the situation of Indonesia, because many things have a different belief with your perspective, I think. So, do you agree with it?
Yeah, thank you. In my view, again, none of us are perfect, right? So, Indonesia is an emerging market, and I firmly believe there will be an emerging market. So that means there's always room for feedback. And I believe MSCI's warning was a constructive feedback that helps us structurally improve the free float, the transparency, the depth of the market. So I would agree with Pak Purbaya to say it is overall a good thing as long as we learn from their feedback, take their feedback constructively and actually execute on it, which I believe the government is very proactive in doing so right now. So that's why we remain optimistic. And it's of course actually a lot easier to sound smarter if I'm bearish, but yeah.
So, wow, it's quite different with maybe the belief of half of us here. Because you mentioned that the governments already have the correct path about the correct the situation regarding the MSCI warning. So in May, we have the result about that. So what do you think about the result? Because now we know that also Indofood has kind of like gone from MSCI index, right? So what do you think about that, Pak Mohit?
I think instead of focusing on stock specific, obviously on Indofood, it's a tried and tested company. So this is actually for value investors, you would be taking this time to assess the company properly and taking this opportunity that you might actually get a good company at a decent valuation. So again, I don't think it should be, it doesn't mean that they're broken. The business is not broken. And in terms of my base case view is Indonesia will stay within the emerging markets. And in a worst case scenario, I think it would be downgraded from a weighting perspective. So instead of a 1.3, 1.4% weighting within the EM, could it go down to 1% weighting within the EM? But I hand on my heart, I don't believe they would go to the frontier markets. I don't believe they should go there. Yeah.
Okay, well, it's a strong belief about that, Mohit. So I will continue to I will continue my question for Pak Mohit still. You mentioned that you mentioned before the factor that international investors considering about the markets, the Indonesia economy. But could you enlighten us more how the investor will see Indonesia with the government's current action? Is that enough to draw the investor to come in, or you? I think you have different insight about that. What we need to draw the investor come in Indonesia.
We have a tendency to have a very short attention span these days, so we are focused on short-term headlines. So if investors are taking a very short-term view, they might exclude this market basically for now and do this whole wait and see. However, as I pointed out, Indonesia has maintained durability over the years, and it's not a straight line. There is volatility in between. So does it warrant exposure in global portfolios? Yes, I believe it does. I'm not saying avoid the other markets, but I'm saying Indonesia shouldn't be excluded. It warrants a position in the global portfolios. And behaviors, we as humans, we tend to be more bullish when the price is going up, and then suddenly when the price is going out, we get scared. But that's hardly the way to look at allocating capital. If we believe in the fundamentals of the business, when the price is going down, we should be assessing whether that fundamentals is intact or not. So,
so you think we should see the big frame, the long terms, and not on the short term instead, so we can like have a confidence to invest to Indonesia, like that. To the investor,
yes,
I think. Yeah.
I would zoom out again, as I mentioned, zoom out and see the bigger picture where you can. You might have a portion of your portfolio where it's strategic or you're trading it more actively. I understand if that is short term, but we can't be buying something and expecting it to go up 2x, 1x in like a month. You know, that's not investing. You know, at the end of the day, so that's trading, and there is room for trading in the portfolio, but it should not be, you know, go all at once, like all of it is trading. There has to be some form of fundamental investing as well.
Okay, thank you. I would like to inform you, pardon us, forgive us. I mean that forgive us because we have lately information because the time is so running out right now, and we don't have time to Q&A. So if you have a question, maybe you can ask the panelists later after the session, okay? So I would like to continue my question for Ms. Chang. Earlier you stated that Asian economy will slowing down, right? 2.5%. But Indonesia remain at 5%. With the various elements that were mentioned earlier, in reality, even Moody's questioned Indonesia's fiscal. So, do you think the Indonesian current fiscal policy is appropriate with that spending for MBG, its free meal, that's worth 1.2 trillion rupiah per day, Ms. Chang. That's a huge amount of money, right? So, do you think that's appropriate to do something right now?
It's a great question. I think I have a very nuanced answer to this. I would say yes and no. So before I directly answer your question, I want to to get back to the broader picture first. I agree with Mohit quite a lot, and we are constructive on the growth outlook, and indeed our projection is also above the consensus, and we agree with your view that Indonesia is likely to maintain the yin status. So that's a broad picture. And in terms of the fiscal policy, I think at this point it's very challenging. These days, when I talk to, I lead an Asia team to cover the region, but I primarily focus on the Chinese economy. But these few days, when I talk to people about the situation in Indonesia, I see a lot of parallels between the Chinese economy and the Indonesian economy. One key issue is people on the ground are feeling not great, and people are not spending. That's the setting for the fiscal policy. In a way, the government is doing something, trying to strengthen the social safety net and using cash handouts and use this free meal program is positive. And in a way, I commend the government in taking bold steps compared to China's stimulus program. It's bolder, it's bigger in size. But then there are several concerns. There are issues of whether the coverage is appropriate. Does every single student need this meal support? Yeah. Even in terms of government spending in other areas, investment is investment into the right areas as well, investment efficiency. So this is issue number one. Do take bold actions, which is needed now, but you do need to look at the efficiency of the spending. And second issue, going back to some points you made earlier, there's a communication breakdown between the government and the market. Okay. The message is not getting out there. There needs to be sort of clear articulation of fiscal path, how the government can maintain its fiscal discipline while having those massive support programs. So there needs to be some clear articulation, getting the message out there.
Okay, well, that's interesting when you compare Indonesia with China policies. But I would like to move to other question because the time is running out right now. How do you see the potential for the rupiah improvement with the central bank policies right now and the global situation, of course? Do we still have a chance to going up again?
This is again a challenging question. The currency rupiah movement will depend on two factors. One is the global factor, and one is the domestic idiosyncratic development. In terms of global factor, or rather global factors, that they are going to be supportive broadly to EM currencies, including the rupiah. Is a cyclical factor. The Fed is expected to further cut interest rates. That could lead some further weakening of the dollar and lifting the global currencies outside the US. So that's sort of cyclical factor. In the meantime, this is one trend I mentioned earlier, this kind of doubt or chipping away of American exceptionalism, this very wild debasement trade going on. Again, that's not going to happen overnight, but it's going to gradually chip away on the dollar dominance, attracting investors into other assets, lifting global currencies outside the US. So that's a positive for rupiah. But then coming to the rupiah in terms of relative performance, can it outperform other EM currencies? That'll go back down to economic fundamentals, the perception of how the government is doing, how the economy is doing. So that goes back to the point both of us have been emphasizing, the sort of communication with the market, getting out there the message.
Well, thank you for the answer. And I think this discussion is so insightful, but unfortunately, the time is out right now. So, but I think we agree that Indonesia's economy will sustain well despite the unpredictable situation. And we look forward to see and listen your both of you, your insight for Indonesia economic in the future. So thank you so much for the discussion, and I will give it back to MC.